And for more on property, I caught up with Angus from REA Group.
Thanks for having me on, Ed. Obviously, with the long weekend in most states this weekend, it is going to be a little bit quieter in terms of housing market activity. That's not a surprise. It's what we tend to see when there is a long weekend. But if we're kind of looking a bit more broadly across what we're seeing in housing market activity, signs, obviously we're heading into winter, things are starting to cool down, but it is still relatively busy. The last week of autumn was actually relatively solid and busier than what we saw at the end of autumn last year. Clearance rates, particularly in Melbourne, have been pretty solid. Melbourne's been seeing clearance rates sitting around the mid-60s through much of the back end of autumn, which is pretty solid. It's not the sort of levels we've been seeing in really, really hot housing markets, but it's better than Melbourne's been seeing for some time, where it has been quite a soft market.
Yeah, it seems like Melbourne has really picked things up over the past few months compared to some other parts of Australia.
Yeah, that's right. Melbourne's a bit of a standout over recent months and perhaps a standout for different reasons than it has been for the past few years. We had our home price index out for May, and what we saw was that home prices across Melbourne were up 0.8%, which is pretty solid growth. And notably for Melbourne, that's its fastest month of growth since 2021, really quite a long time. And it's kind of important to put it in the context that Melbourne prices are actually still lower than they were in early 2022 before the RBA started raising rates. It's seen a really slow period of prices for Melbourne and for housing markets conditions in Melbourne more broadly. And so the fact that we're starting to see some growth is in some sense a bit overdue.
And obviously it's Australia's second largest city by population, could overtake Sydney soon, but it's also one of the most affordable capital cities in the country when you look at the likes of Brisbane, Adelaide and Perth.
Yeah, exactly right, Ed. It's kind of remarkable the fact that we've seen such sluggish growth for Melbourne, over the past few years, and even really during COVID relative to other parts of the country, means median home prices in Melbourne are now lower than basically all other capital cities, except for the really small ones like Hobart and Darwin, which is a pretty remarkable statement when you consider that Melbourne is, close to our largest city, is a very high income city. It's not just home prices either. Rents in Melbourne haven't been as strong as we've seen in other parts of the country. So rental affordability, while still challenging in Melbourne, is a lot better there than it is in other parts of the country.
Look, this week the GDP numbers came out. The economy is pretty soft in the first quarter. Could it encourage the RBA to cut rates again and give a bit more, positivity to the property market and potentially boost sales over the next few months?
You'd have to think there's a pretty strong case for another rate cut coming up. The GDP numbers were pretty soft. Notably, consumption was really soft, household spending. We saw there was some growth. It was up 0.4% in the quarter, but that's still pretty soft. And it's in an environment in which we've seen pretty sluggish growth in household spending broadly, despite the fact that population's been growing quite strongly. I think particularly notably, spending on discretionary items, things like takeaway, going out, going to the movies, that sort of thing, has actually basically tracked sideways over the past 2 years, despite population growing over that time, which really points to a pretty challenging environment for households. Maybe not a surprise given what mortgage rates have done, but given that softness, I think that probably makes the case for a further rate cut.
Yeah, and just on those numbers, the household savings ratio increased. So people saved a bit of extra money potentially from the first rate cut of this year, but they didn't spend it. They kept that money.
Yeah, we have been seeing a little bit of an increase in the savings rate. Part of the story there is incomes growing a little bit faster than they had been. We had been seeing disposable incomes falling real disposable incomes falling pretty significantly for two reasons. One, mortgage costs were going up a lot, which was obviously detracting from disposable income, but also the fact that prices and inflation were going up so quickly was also detracting from that. That's starting to turn around now. Inflation's starting to come under control, or even is potentially under control now, back inside the band and expected to remain there. And mortgage rates are now falling, which is going to start improving household budgets.
Angus, thanks for coming on the show.
Pleasure. Thanks for having me, Ed.